Hello everyone and welcome to this week's Gold and Silver Club weekly commodities review in alliance with ACM Gold, presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. So today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the metals, the energies and agriculture. We'll be looking at gold, silver, oil, natural gas, coffee and other commodities. We'll look at the top trade of the week. We'll cover live market commentary, technical analysis. We'll also look at the week ahead, the 6 key news announcements next week which will affect the commodities markets, and of course we'll be answering any questions you may have on today's call as well. So gold price this week, the main factor affecting gold price certainly in the last couple of days has been gold prices remaining steady on the Ukraine tension and Asian buying as well. We've seen that gold prices were trading steady on Friday, driven by physical demand in Asia and the ongoing geopolitical tension in the Ukraine. Overnight, gold prices were up $7 to trade at $1,291 an ounce from an earlier daily low of $1,284 an ounce. Gold prices benefited as the US dollar index hit a multi-month low. Several economic reports have influenced the US dollar and the commodity prices to present traders with highly lucrative trading opportunities throughout the week. We've seen the US Department of Labor reported that a number of individuals filing for unemployment insurance declined to 319,000 in the week ending May the 3rd, which was supportive for the US dollar, whilst on the flip side, gold rebounded on fresh reports surrounding the ongoing geopolitical tensions in the Ukraine. So gold has experienced heavy safe haven buying in recent weeks amid the heightened Russia-Ukraine conflict. On Thursday, pro-Moscow separatists in the eastern Ukraine ignored a public call by Russian President Vladimir Putin to postpone a referendum on self-rule, declaring they would go ahead on Sunday with a vote that could lead to war. So as the tensions between Russia and Ukraine continue, there remains a bullish underlying factor for gold prices in the short to mid-term. We'll certainly take a look at that on the gold charts very shortly with you. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. That's a bit of background on the Gold and Silver Club. We'll take a look. We'll move over to the gold price. We'll take a look at the markets just very shortly as well. This week has in fact been on natural gas. We had a very nice setup just prior to natural gas inventories this week, which of course continued short on this as well. With this trade, we were in at a risk of 65.650 US dollars risk per lot, traded for a reward of 190 points, 1,000. Nice quick setup we received. First thing we want to have a look at the moment, the real movers today have been the energies. We've seen a really nice move, sell-off on Brent crude oil, sell-off on WTI, and a sell-off on natural gas. Now, what I would note here on natural gas, we finally broke through this upward trending trend channel. This was really sparked by the storage inventories that we got on Thursday. So just yesterday, this is when we started to see a big fall low. We broke through the 4.723 Fibonacci level. Now we're just coming down to a pivot point at the moment, finding a little bit of support. Now what you want to note is there is a moving average right at this level here. So let me just draw that in for you. Bounce, little supportiveness we were getting was all around the 50 MA. That's now been broken. We got across of some key moving averages above. We'll certainly be keeping an eye on that. I think if we can break 4.531 here, we should get a nice move lower. Natural gas continuing to break down. We've had a very interesting move on Brent earlier today. We spiked up. We actually came all the way up to the 200 MA, which sat at 108.76. You can see the setup here, but got a nice reversal. We've just come down, hit a Fibonacci level at 108.16, starting to break through that a little bit. Maybe just bear in mind, might be a little bit of a trend channel forming here on the shorter term that we may find a little bit of support at, but we've had a really nice move on this since this morning. We've moved us circa around 50 points so far. Nice retracement actually. You may get a little bit of a bounce here around the 108.16 level. For us, that's our profit target hit this morning on Brent crude oil. And now if you look at WTI, similar pullback on WTI. We actually had a nice breakout overnight and this morning surged up to the 101 level, found some profit taking there, bit of a pullback at the moment. Keen to see how we are going to close on the weekly here with both Brent and WTI. So there's been a sell-off really across Brent, WTI and natural gas throughout mid-morning to early afternoon here, and natural gas at the moment, I'd say if we can get a break below this weekly pivot, we are going to break down low. We're just going to see the momentum build now that we've broken below that. We look like we're about to break lower as well. Also, take a look at coffee. Coffee's had a very similar move. You can see just here, we've got the 50 MA as well. We broke through that just yesterday. We closed right on that level. We've been short coffee here for quite some time. We continue to build up momentum to the downside. Coffee has been one of the best performers of 2014. We had the drought in Brazil in December, the floods in Brazil in December, the subsequent drought in January, which affected about 30% of Brazilian coffee crops. That caused, from a supply-demand perspective, a nice move higher over the month of February and March on the coffee market. It's moved over 50% in 2014, and now we are due a bit of a pullback. Seasonality-wise, we're coming into a more bearish time of year during the summer months here in the UK, and this is typically an area or a time where we expect a bit of a sell-off anyway. So that seems to correlate nicely with a close below the 50 MA today. We're seeing a sell-off. We're a little bit overextended on the day here, but I'll be interested to see next week if we're going to continue to start to see a short-term bearish move and short-term pullback on coffee. And we'll take a look at wheat market as well. Now, wheat for me is very interesting. Every time there's been any conflict in the Ukraine and Russia, any major conflict, we see safe haven buys in gold, and we also see a nice move on wheat and corn. Now, the reason being is that Ukraine is the third biggest exporter of these markets, particularly of corn, wheat as well. It's a big producer of wheat, and we often see a nice spike to the upside. So particularly if things do kick off on Sunday, we got a nice gap higher on the Sunday open last week, well, into Monday as well, and we may well see that follow through again. I note we are finding support. There is a bullish channel here that you want to take note of. We seem to be getting another bounce off that level just at the moment on the wheat market. I would certainly keep an eye on that. So this is the nice trend that we've got at the moment. We have become very close here on wheat and also on the corn market. We're very close to breaking out to 2014 highs. So for me, I would definitely be keeping an eye on both wheat and corn as we go into next week. There may be some buy opportunities as we go into the close here on Friday. You might be able to take advantage of some pullbacks in the market today. We're getting a little bounce here just above 715. I want to see if we're going to form another hammer today by the end of the close today and see whether we're going to really be lining up nicely for a move into next week. We do have a W-shaped reversal pattern here. I'll try my best to draw it on for you here. Actually, I'll tell you what I will do, because we may not be able to get the visuals with these trend lines. I will just draw that very quickly on for you so you can just see what I mean by the reversal pattern that we've got here and potentially a breakout. So here is the V-shaped reversal pattern that we've got at the moment. Okay, and here is so this is the V-shaped reversal pattern. We actually broke above. Here is the neckline on that, which we broke above on Sunday open. Now we're just possibly now previous resistance is going to become support. So this was the resistance from last week. Now we seem to be coming back, bouncing off that level, and now I would be expecting a further breakout into next week. That's what I'd really be looking at, either outside of that consolidation zone at the moment. You can see we've got MAs above and below, we've got Fibonacci's above and below. If we put it into the 4-hour time frame, here's what I'm looking for. Either a break above 12.95 in order to get a spike to 13.06, or a break below 12.85 here, so it's about 100-point range here, and a move down to 12.76. Otherwise, as we stay within this consolidation zone, I'm really not too interested in just trading that very small range at the moment on gold. I want a nice solid breakout either to above 12.95 or below 12.84. That's what I would really look for here as we continue to consolidate on gold. The US dollar index, it sold off and broke below one-year lows yesterday. And we actually came down, we believe we hit below 79, about 78.90, and from there we had a capitulation. We had a huge move to the upside, and that actually put a little bit of pressure, muted pressure on the gold market. We've seen a big move to the upside. We're closing pretty much near the weekly highs on that. So do follow the US dollar index as we go into next week. That should help give us some further direction. The reason why we're not seeing gold sell off as much as possibly we should do with the surge up on the US dollar index is because of the Ukraine and Russia conflict. If we take a look at silver, silver not faring as well as gold actually on the daily here, a bit of an inverse hammer starting. We're continuing to stay within this downtrend at the moment on the silver market. Really, silver is struggling to get a decent breakout. We need to really get a close above 1937 and also really a close above 20 to start building up some momentum here to the upside. Copper has been fantastic. A lot of the moves that we've been getting on the copper market, we've seen this. We've got a trend channel on copper which has just remained intact. Really from about mid-April, we continue to stay within this trend channel. Each time we've come down and tested the lower end of that trend channel, we've got a good bounce and we continue to get solid moves to the upside. So copper probably faring the best out of those three metals between gold, silver and copper at the moment. Any retracements towards the lower end of the trend channel, we're really seeing some decent buying there. Okay, so what we do, we just go back and take a bird's eye view of the markets and really what we would be keeping an eye on as we move into next week and what is going to be worth watching for potential setups here. So coffee market, as discussed, we've closed below the 50 MA. We look towards getting further bearish momentum here. I'll be looking at the next fib level below here really for a move down to 1080 at the moment, which would be about another 47-point move lower. Wheat, we're getting a little bit of supported bounce. Previous resistance seems to be below last week's resistance. This week's support, we could see a move down to 697. For now, we're holding. Natural gas at the moment broken below the 50 MA. It's finding a little bit of support at a pivot point here, but if we can break through 4.530 here and 4.500, I think we're going to continue down until the next key Fibonacci level at 4.431. Brent crude oil, as discussed there, getting a little bit of a bounce now. It's come down. It's really hit our profit target already. Nice sell-off from the 108.50 level earlier on today, and we may just continue. There's a bit of a trend line here to watch as well. So Brent crude oil, we're just already in and out. Nice quick day trade there. Copper, the momentum is to the upside. Gold still range bound. I'd look for a break above 1295 or a break below 1285. So with that, let's take a look at the major news announcements as we go into next week, which are also going to affect the commodities market. On Tuesday, the 13th of May at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core retail sales. US core retail sales measure the change in the total value of sales at the retail level in the US. So it excludes automobiles. It's an important indicator of consumer expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as inversely affects gold and silver. Next Wednesday, the 14th of May at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US PPI. So that's the producer price index measuring the change in the price of goods sold by manufacturers. It's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Next Wednesday, 14th of May, important news announcement for your oil trades, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. We have the US crude oil inventory. So that data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis, and a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. That often does follow through. That's every Wednesday like clockwork at 4:30 p.m. Central Africa time. We've then got Thursday, 15th of May, Philadelphia Fed Manufacturing Index, 4 p.m. Central Africa time, 10 a.m. Eastern time. The Philadelphia Fed Manufacturing Index rates the relative level of general business conditions in Philadelphia. And next Thursday, 15th of May, 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. So that is the Energy Information Administration again providing the report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst it is a US indicator, it does tend to have a greater impact on the US dollar, Canadian dollar too. And the natural gas, we saw the inventories this week give us a really nice sell short opportunity. We sold off significantly and that led to a 190-point move. So it's a great trade every single week with the natural gas inventories. And Friday the 16th of May, 3:50 p.m. Central Africa time, 9:55 Eastern time, we've got the Michigan Consumer Sentiments. That index rates the relative level of current and future economic conditions. There are two versions of that data which are released 2 weeks apart. So you've got the preliminary data, which tend to have a greater impact. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish, and that will inversely affect the gold and silver markets. So those are really the six major news announcements you want to be watching for the week ahead. Okay, fantastic. So a couple of questions there just about the training programs. Right, well, you can certainly find out more about our upcoming workshops over the course of May and June, and also how to gain access to our live trading room at the Gold and Silver Club and join our international community of traders at the Gold and Silver Club. You can very simply contact us either at our Johannesburg office on +27 110838403. You can email us at office@thegoldandsilverclub.com, or just very simply go to the link www.jointhegoldandsilverclub.com to find out more information on our live trading room and coaching programs that we have available. And of course, make sure you subscribe to our newsletter. You will receive free weekly news and upcoming major news announcements which will affect the commodities markets, on the energies, on agriculture, and also on the precious metals, and that will give you the full outlook for the week ahead. So do make sure you subscribe to our newsletter as well. Okay, so with that, I will leave you with the contact details on the screen. Wish you all good luck for your trading for the rest of today and moving into next week. Thanks everybody. Bye-bye.